This movie Asia, again, another one, little VCP. It's putting in its time, letting it just form its time to go. TXCM, a lot of people are starting to talk about this guy, I believe. I don't know if you heard much about it, Serge, but here was the first time, then it collapsed, but then now it had that run up. Now it's putting in its time, and then we'll see if it can start to make its move. HCA, it's a medical company. Again, here's another one. It already had its earning, and the earnings moved it up. So that means institutional demand was in there. You can see the volume was above average on earnings, but it didn't move that dramatically like usual earning pops, but it's putting in its time. So let's see if it can just go a couple more days and then a good thrust on HCA. PayPal, ugly base, but then it finally formed this VCP right around here. Took off, but then earnings popped it down, and it looks like the pivot is resetting again. As you can see here, boom, boom, boom. So here seems to be the pivot point that's resetting.
Give me 1 second, guys. I'm going to add a 2018 month.
Okay, though. Oh, I started from down here.
Can I call Rick, then he link me?
Huh? No, just send her the.
Yeah, but
can I do? Let me see.
Send me into my what am I watching? Wait, what?
So,
any questions? While we're waiting.
How do you differentiate between the distribution phase and the VCP aspect of it? And that throws me off.
Distribution. So then, okay, so this is it's. We can let's see.
Is the VCP kind of a distribution or?
VCP is pretty much supply and demand. Think of supply and demand. Because, for example, like here's kids, for example. Actually, let me go into 5 since that's the one I'm really looking into. Okay. So the VCPs are really supply and demand. So right here we have a huge supply, a lot of trap buyers up here. So we have all this supply in the market. Then institutions come in, and then once all the supply gets eaten up, and some of these weekenders come up, like for example, here we have all the supply, then we have this run up. That means the supply just got eaten up, and then now we have people that are in profit and people getting back to break even. This level just got back to break even. Now we had a sell-off. Then we had more people coming in. Now we had a sell-off at this level. We have people coming in, and then right here is our resistance point. So picture that you're always doing supply and demand. The less selling that occurs, that means more accumulations happening. The weak hands are getting knocked off or getting shaken out. And then we're getting accumulation. Like right here to here, weak hands shaken out, accumulation. Now it's just like, okay, do we have enough, have the majority of the weak hands been eliminated? Has supply stopped coming in? If you look at the volume, oops, sorry, you can see within this whole range that's tight, look at the volume. It's below the 50-day average. Look at that. It's half here, again low, 400,000, 600,000, 400,000, while the average is over 1 million shares. So supply is definitely getting low coming in. So it's getting tight. So just picture all VCPs really is all about supply and demand. Has supply stopped coming into the market? Is 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 there now demand for the stock?
Mm-hmm.
Which there will be. I mean, looking at the past history, there has been demand for this stock. So if so, one supply, and the beauty of the VCP is that because supply has stopped coming into the market and the institutions have really racked up, if there's demand for that, that's when you get those skyrocket explosions that you'll see it move up 3-4% within the first 1 to 2 minutes of the opening bell.
Okay.
Because the less supply that there is, and there's the demand, the higher they can sell the stock. The question is going to be, of course, 126 to 136. That's going to be the next area of resistance, or here, but pretty much this is like the last area of supply.
Mm-hmm.
If people have been still holding from this area all the way down to here, 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 here. So this is the area that either you'll get a pullback, a small pullback, and then continue up.
Okay.
Yeah. Because you always look for the VCP very simply. Always look first at the right side of the screen and see if you see tightness. And by the definition of tightness, right, you want, for example,
Hello?
Hey,
Hey,
Finally.
after like 3 hours.
Oh,
What's up?
what's up? Hold on, I gotta put you on my speaker because I could barely hear on the phone.
So for tightness,
Hello?
you want
No, I can't hear you. Hold on.
Hold on, Rick is presenting something.
so for tightness, you want that last tightness of the contraction to be less than 10%. As you can see here for 5, this last contraction is pretty much at 4%. So that's getting really, really tight. So supply to the marketplace is really diminished. So now let's see if in the new week coming up, if it's any distribution days, that it just holds and just puts a small little redness like this. And then eventually we get that green day and up we go. So that's something like this I would like to see for the coming week. And then boom, off to the races.
For the distribution, okay, I see.
Yeah. I mean, because remember, distribution, if you want to know what counts as a distribution day, would be any big red candle greater than the previous day's candle. For example, here on 111, that's a distribution. You see, we had the green candle, the next day, red. That's a distribution. This is a distribution. This didn't overcome this, so it's not an accumulation day. Once you get that big green, you get that accumulation day. So right now, this is all right now just biding its time below the 50-day moving average. And then you can see Friday, 400,000 compared to 1 million. It's not much is coming into the market. Would like to see it go even smaller than that. Like, yeah, it's about 400,000 seems to be it, below 50%. Who else was on the list? AMRC. This is an IPO. It's finally forming a nice VCP. And now let's see if we can get some traction going. It's a thinly based stock, so you also be careful about the thin ones. Serge and I have talked about thinly traded stocks before. You just got to be careful on those because there could be periods that there's nothing happening, and then all of a sudden someone will come in, and then it can just jump up and jump down. Right, Serge?
Yep. And well, that one doesn't have a Morse code.
Yeah, and the same thing, if you look at this guy, another IPO stock. He's setting up. He's just putting in that time. As you can see, he went from nothingness to now we have buildings coming up. What I like to call them buildings. We went from to now we're getting stuff coming in.
I have seen that this kind of activity in the NEO, which is China's Tesla.
Yeah, I had some friends in NEO. They just got shaken out.
Yeah.
Yeah, didn't they have good earnings or something? And they've been having news. I to be honest, I haven't traded NEO. I'm waiting for it to break that past that $8 value.
Right.
Mm-hmm. Yeah, 8. I'm also like waiting for that.
And then, Right Medical, he just finally decided to take off. Missed it. I mean, it's still within range, but not chasing these days the way the market's behaving. Same thing with GKOS. Nice VCP. Boom, 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 boom. Now he's pulled back to the base. Can get back in here if I want to. I don't know. HZNP. I don't know if you had that on your list, Serge.
Yeah, I put it in the homework.
Yeah, you can see. Nice little VCP. Boom, boom. He ran up, came back with right within the buy range.
And what I like about that one, if you look at the comment I made in the homework, is that them toots. There is a big fund that I really like, the BlackRock. Those guys, every time they put their money into something, usually funds. So there were recent news that they increased to 8.3% their stake. That makes it a lot more attractive to me.
Right. ITGR, they're setting up. Boom, boom. Oh, he came down a little bit. Let's see if he finds support off of here and comes back up. Mongo.
What is that pink line? Your 50?
150.
150. Okay, I don't use the 150.
Yeah, I pretty much use the following moving averages: the 10, 20, 50, 150, 200. That's it. Because I use the 20 as an indicator. If the stock breaks out, you should be seeing follow through coming in. But if it starts to pull back and goes and violates the 20, right there is an indication that maybe it's not going to work out. So if it closes below the 20, then I'll shave half off. And then if it goes below the 50, I'll shave the remaining off. And then it won't even, so those are like my indicators to get out even before my stop loss gets hit. So chances are the trade's not going to work. And keeping a journal, I've seen that it hasn't. When those moving averages on the breakout start to get hit on when it starts pulling back down, chances are it's going to fail. So those are like my indicators to get out earlier than the stop loss. So it's less of a loss.
Right. So it's an early exit type of deal.
Exactly. Good early indicator.
What do you think from the homework? I see Planet Fitness. I've been squatting and kind of
it made, you can see right here, you can see this little orange line. That was a nice little low cheat area. Missed it. So if you would have gotten in there, you would have had a nice little short-term gain right there. And then it's just been biding time. Then it tried to break out. He squatted, Gil started teasing about it on thing, and then now it's pulled back. So now let's see if it can just make,
But look at that volume. I like that volume recently, like 3, 4 green candles right there.
Yeah, it had it, but the thing is though, it didn't move much. It just kept squatting because you can see, look at this guy. That's not good. It moved and then it just took it all back. Close the day. This
So
guy,
let me see. I'm not familiar with type of candle. It's the same, just
yeah, I mean it moved, right? It came up to here, but then
It's a doji, but on
it's
on the top.
it's an inverse
like
hand.
a tombstone.
Mm-hmm.
No, but I'm saying I'm not familiar with like the chart you use. The type of chart you use takes me a second to kind of adjust.
Oh, because of the bar charts, right?
Yeah, yeah, yeah.
Right. So it's pretty much almost the same. No difference. If I go like this real fast here, if I go like this, you'll see the same thing. It's going to be, see? Nothing really. Just, just little blocks. But you can see
Okay.
candle to bar.
It's just filled like okay, got it, no problem.
Got it?
Yep.
Yeah, because it's like the old school styles, and I just fell into the habit of doing it that way. And then this one, everyone and their dog and pet raccoon is keeping an eye on this one. I know it.
TNDM. Yep, yep.
I mean, here was a good short-term trade from this breakout because I know a couple of people that bought into it and now they're just holding it and just sitting through all this. Because even from here to here is like an 11% loss. But if you bought down here, you can just sit through this.
I see. Good stuff. Any questions so far from the gang? All right. I have a few topics that I want to talk before we go.
Let me just show one more.
Yeah, go ahead. No, take your time. I have, you can do that, and then I'll show a few of the homework that.
Okay, yeah. I'm just going through just so you guys know. And then, yeah, because I had something to discuss because it was based on Aki's question yesterday or concern yesterday.
Go for it.
Your old friend, Serge, BURL.
Oh, you know what? I still have it. I like that. They're strong. Every time I go to that store, it's like packed, and they have good stuff. It's cheaper relative, but good chart.
Yeah. This one started to move the other day, INSP, medical company.
I don't have that. Do I? I don't think I have that.
Yeah. Look at the tight setup over here. So that's the thing. You'll have these run-ups, but then it's gonna have to pull back eventually.
Right. They need to rest.
Yeah, exactly. And then you'll see all this just tighten up and then whoosh, off it goes. So it's the same thing that happened with several other stocks recently, but then the pullback was devastating.
Yeah.
Like here's this little guy, but he has earnings coming up. SPSC, GH, another IPO stock. He's just resting, waiting for it. ULTA, I don't know if you have it on your list, Serge.
I do. Looks good.
Yeah.
The longer the base or the flat, the up there, the consolidation, the better it is.
Exactly. The longer it can like this is too. For some people, this is too V-shaped.
Yeah.
So they will want to see this make, as they call it, make more time. Just keep consolidating toward the left. I mean, if you look on the weekly chart, it's already almost 4-week tight. So that's pretty much on what I'm looking at the buy list I've already shown. You guys have already seen 5 Lulu, and then I have my on deck list, but I'm not going to go through that. Let's give Serge some time to show his, but Intuit just popped out. Excel, VCell. I think you guys were looking at that before, right?
Diesel, I still have it, but she's taking her sweet time. My God.
Exactly. And then Middlesex Water. This one. Adobe starting to set up
Go back to the previous one you had.
MSEX.
I don't have that. M6? No, I do have that one. That looks good.
Yeah, Adobe looks like he's about to try to make a move.
Adobe.
Just want moving averages to start to turn up, because if you can see, the moving average is up, but then it went flat.
Mm-hmm.
So I want the long-term moving averages to turn up. The 50, which is this red line, he's starting to curl up.
Mm.
Yep. So
Hey Rick, can you talk about MEDP? I believe you had posted it a while back. I
was in it just recently.
right before the pullback on it.
Yeah, I was in it recently just now. I haven't updated my Twitter, but I got in on here, sold half here on where the green line is, and then put my stop to break even because I wanted to see if it was going to do a natural reaction, but it blew up, so it was just like a 6% gain, 5 to 6% gain at the end of it. But yeah.
So on something like this, for example, okay, sometimes, when you guys talk about starter positions and going into full positions, can you talk about that a little bit? Like buying, I believe you buy regular shares. So what would be a good starter position? Like like if I have quite a cushion in my account, then what? Like buying 20 as a
Okay.
starter
Right.
position.
Okay. So then, in the past, I would have gone for me. We're gone full in, but this is depending on how the market condition is. If you're coming out of cash right away, instead of going full position, start off with a quarter position, 6.25. Test out the market. If you start to see some traction, then start building up. Start ramping up your exposure. But start off small, see if you get some winners off of the small, and then let those gains finance your next position. Make have the gains be your cushion for your stop loss. So for example, if you go in and you on a 6.25% position, quarter position, you make $200. Now you can, or $300, whatever the amount is for 6.25. Then you can use that gain to finance your next trade that you scale up. So
Yep, go ahead.
pretty much you want to build on success.
Another thing for the starter position. So starter position is kind of testing the waters in a way, right? So go back to Planet Fitness. Let me give you an example. Okay. Is it Planet Fitness, or there was one that ate up my one of my Robinhood account starter position? Oh, Crocs. So pick on Crocs.
Let me clean it up. Because I was really into this guy. Second clean.
I still like it. It's just not there, the interest a little bit. I mean, volume is here and there. But in my case, so I do mostly options, but I also do shares. But when I do options, a starter position means buy one contract, and it depends on the type of blocks that you use to trade. Or so depending on, let's say, in my case, how much I like the chart or the stock, and depending on what account I'm trading on. So I have my Robinhood, and I have the Thinkorswim that I cleaned up actually. Starter position is one contract to see. I feel it's going to move. I see the volume coming in, but the market is kind of, the amigos are not helping all that, so you're not sure. But in the case of Planet Fitness, look at Planet Fitness. Feel into for a second. So I had a starter position on those volume days. So right now, I have a starter position on Planet Fitness when she broke with the last green volume, but as you can see, she squatted back down. So in my case, my risk, it's okay if I lose, 50 to 150 bucks, because when they move, you go heavy and they usually make that up.
Right. Yeah, because for usually a starter, because again, are you doing, the guy who asked the question, are you just doing shares only?
No, I'm doing both. So mostly on, it's easier to see with the contracts. You can only buy one for startup
Right.
positions, and I usually only go. I do really low risk, one or two stocks only. I mean, one or two contracts only. I don't like to go big because I'm still learning. This is my second year. I'm still learning on all these. But on shares, that's where it's really tricky for me, and if it's also like a smaller stock, I usually normally like, all right, I'll just go with 100 stocks, I'm like, but obviously if it dips down, I just don't know when to go and hit that stop button. And
Well,
usually
okay.
mostly it stops me out if I'm going like a couple dollars down, even though.
All right. So then to answer that question, you said that you don't know when to stop you out. Well, one, before you even get into a trade, you should already have predefined where you're getting out.
Yep.
You need to predefine that before you even get into any trade. You need to know where you're getting in and where you're getting out. That's mandatory. Second on the part of where you're getting out, you want to back into your risk. So, for example, um, out of your account, what percentage of equity are you risking per trade? What percentage of equity are you risking per trade? Are you risking 1%, 1.25%, 2.5%? Like how much risk of your equity are you putting into a trade?
Okay.
You have to know that. Usually the minimum that most people will do will be at least 1%. I mean, I can go into position um, portfolio management another time, but you always want to have at least 1% of risk of equity, because the minute you start going into 2%, every time you lose more than 2%, um, the risk of ruin grows larger and larger. So you want at least within 1%. The average is usually 1.25 to 2%, 2.50. But if you're risking 2.50, just remember, the more times you lose, it starts to work against you when you're playing that heavy.
Okay, gotcha. All right, I'll have to play with the paper money to experiment with these and see how that works.
Yeah, because for example, if you risk, if you like say for example, you risk you put a 25 from your account, you put a 25% position size on, and if you only want to risk 1.25% of equity, your stop loss will have to be 5%.
Right.
So you have, yeah, so that part of the math. I mean, I showed that a couple of weeks ago when I was talking with Eric about that I put up a sample on the group that let's say if you have a $7,000 account and you want to make 100% gain, how many trades would you need to do that? That was posted in the thing. You can take a look at that in the old, it's on I think about a week and a half ago I posted that up.
Yeah, I think I saw that. Yeah, I'll definitely take a quick look at that for sure.
Yeah, because also just remember, for this is what I learned, for optimal position sizing is usually 2 to 1. So you pretty much want 25%. Now that doesn't mean you have to go full in 25% right away. You can have it at let's say you're coming out of cash. You can do 4 quarter positions, which would be your 25%, and then see how that moves on before you start gaining exposure. That's what I was talking to you yesterday, Serge, that I was testing some new stuff out, which is pretty much playing with position sizing, letting small success finance larger growth to build up. So I've been testing that. It's interesting. It can be frustrating because the frustrating part is, let's say you get something small and then you hit and then you try to go big, but then you lose and then you go back to small again. So it's kind of like trying to get that feel for that. But it's all learning curve. But yeah, when you're coming out of full cash, go small first. Test out the market. Either do a 6.25% position size or a 5% position size. Get a feel for it. If things start working, and you're seeing, and by working meaning you're seeing a lot of setups forming, they're breaking out of bases, they're following through, start ramping up your exposure. You start seeing things fail, then scale back down. Because remember, this isn't an all in and all out. You can go, you can scale in, scale out. Even that small position size, you don't even have to go in the full 6.25 at one shot. You can go in 50% of that. The stock moves up maybe 2%. You can then add 30% of that. It goes up another 2%. It's moving up. You can add the remaining 15%. You can scale in that way to get that full, let's say, quarter position. So again, many ways to go in and out, scale in, scale out.
You basically just want validation,
Exactly.
If you put your money in, you got to make sure, Rick said it right. So another thing that I always think when I'm about to buy is, I think of myself as giving an explanation to somebody real quick. Doesn't have to be anything fancy. Just why am I buying? It's not, am I chasing? Do I have a reason? I'm usually okay now, but I remember when I started, I used to chase everything that moved. But now, we've been reading, studying. So I think about, why am I buying? Is volume coming in? Is the chart breaking any inflection points? Are we on bottom? So a couple of things. Have a reason for why you're buying. Like if you're explaining to somebody next to you, like, hey, I'm buying because she's at bottom, the volume is drying up, blah, blah, blah. Like we have the type of conversation we had in the chat, something quick. And number two, always have, I'm getting the heck out of here if she gets to that value. In my case, when I do starter positions, sometimes the starter positions in options is a little different than shares. For Rick, the percentage that he's giving, the 1, the 2 point, whatever, it equates to my whole starter position. So if I put $50 in a contract and, it goes out, sometimes I cannot pay attention. So I'm okay losing $50. But that equates to that percentage that Rick is saying about the risk and all that.
That would be what I would be putting in as a stop loss. What you're risking at the contract level, that's pretty much what I'm saying. Okay, this will be my stop loss.
Right.
Right. And again, let's piggyback on what Serge said is, for example, you have to have, and I've championed this a lot, and Aki knows about this, that you have to have a game plan going in. You have to have a game plan going in. Like for example, here's this trade recently, AMED. Nice little VCP. It broke out here. Look at this, beautiful. We had follow through, and then all of a sudden, oh wait, things are not behaving properly now. Here's a low. Here's a low. I'm like, volume wasn't going good, but I'm like, you know what? For it to take away that 6%, 7% gain, something for me is not right. So I said to myself, okay, it hasn't violated any of the moving averages, but I'm just not liking the behavior. So you know what? When it gets to my break-even point, I'll reduce half the shares and then see how it behaves after that. Right there, what did I just do? I just reduced my full risk right there, and I moved up my stop. Right there, risk has been reduced. So I had it originally at a 5%. Now I just bumped it up to being at 2.5, and then with the half the shares removed, now it's only that small little guy. If during the week he can recover and start to go back in my direction, I'll add those shares back in. So again, you always want to be managing risk reward ratio. You always have to have that in the back of your mind. Because for me, I pretty much focus on pretty much like 8 keys, pretty much you can say. That's pretty much market timing. That's where the VCP comes in.
Okay.
Portfolio turnover. That took me a while. Surge was good at that because Surge, when we started trading, I would hold longer. Surge is like 4 or 5 positions, like within a day's time frame. Surge mastered turnover.
Hit and run.
Well, I kind of tried that with SPY yesterday, and I was doing the same thing, and I made like almost over $200. I was like, that's great, and I didn't even lose a single dollar on SPY. I was like I did like 5 trades, and it just went well.
if you can, but you gotta be careful to not trigger. For example, I don't know, George is here. Hi, Michelito. He's not here, but people with smaller account than 25K, you got to be careful with that. And the way I do it on my Robinhood is, you got to just manage. And I wanted to ask 2018 about Tasty. Are you still using Tasty? Tasty Works? Are you there? Yes, man. So because Tasty Works, they give you, so you can do unlimited day trading with a cash account, and they will give you your money next day. So I don't have a speaker, she said. Oh, all right, sorry.
On Tasty Works, you don't need $25,000 equity.
No, you don't. So are you telling me or you're asking me? You can day trade every day. So on Tasty, the way I understand it is you can day trade every day with a cash account. The money will clear. I'm telling you, Green. The money will clear the next day. So if you have, let's say, you have $1,000, you can use that $1,000. So you use it up that day, and the next day you will get your $1,000 back. And so that's why a lot of people are using that Tasty Works. I saw it. I haven't. I'm kind of currently happy with my Robinhood and Thinkorswim, and now it's end of the year kind of deal. So for tax purposes, I reset my accounts, and that's one of the things that I wanted to talk, because that's something I didn't do back in my early days. So there are a few things.
What do you mean by reset account? You sell off all of the stuff?
So a couple of things. My gains, I pay myself. I take them out. Let's say if you're gonna start, so my Thinkorswim account, I reset it. My Robinhood account, I reset it. There are a couple of things that you can do it. So if you want to start, let's say with a small account, $1,000 starting the year, and throughout this year you make whatever profit you make, the next year you reset your account to $1,000, right? And or zero in my case, because I moved money around from, I had a lot of money on Robinhood, then I pushed it to my Thinkorswim, then now I'm taking away from Thinkorswim, starting doing a lot of Robinhood, because again, this year I did a lot of Thinkorswim. Those commissions add up, those suckers. Right?
Yes, I'm starting to notice that, Serge. Thank you for that. I got to give him a call.
Listen, I mean, we hate on Robinhood and everything, but all this year I tested Thinkorswim and I like it great. But those commissions, and especially me, because I in and out, and you're racking up $500,000 like nothing. You know, at the end of the year that you see the statement, you're like, what else? That's another funded Robinhood account. So, you know, you just got to keep those things in mind.
Exactly. Because like looking for this trade, for example, I got in, right? I bought at the breakout. That's one commission charge right there, right?
Right.
I got, because it hit break even, I sold half. That's another commission charge right there. If it turns around and goes back up and I want to buy those shares again, that's another commission charge.
Yep.
Right there.
Yep.
And then if it happens to hit my profit mark here, that's another commission charge if I take half off.
Exactly. I'm telling you, it adds up. Again, I have love for both platforms. I grew up on Robinhood, so it's on my heart. And I like it. So I keep going back to Robinhood. And again, I'm a swing trader because of the rat race. So, you know, sometimes I get out of work and doing things and I do quick day trade, but for the most part it's swing. And I think Robinhood suits me well for now.
Oh yeah, definitely. Hey Serge, let me address one thing and then the floor is all yours, okay?
Okay, go ahead. I'm sorry to interrupt.
No problem, man. So let me address a question that I saw in the group when I was scanning through yesterday, which was about how to hold for a longer time frame.
Yeah.
How to hold for a longer time frame. Okay, go ahead.
Yes, because I've seen that question and in the early days I had the same issue as well. Because sometimes you'll see the stock run up, you'll see those couple of green days, and then the day you'll see that one little red. It scares you off, and then you see it was just a fake, and then it keeps going without you, and you're slamming your head like, what the hell? So this is this one. Let me see. Okta, perfect.
Yeah, nice. That was a good one.
Yeah, and this is also when they say in Mark Minervini's book, march to your own drummer, which means pretty much avoid the outside noise. Because I had someone tell me, nah, it's not setting up properly. Okay, yeah.
I can see who that is.
Okay. Now the person goes to me like, wow, man, you really scored on that trade. Yeah, if I would listen to you, I would have missed it.
Yep.
So then what for holding, right? One way is don't look at the trade during the daytime during work. That's the easiest way to do it. Set your alert at your profit target. If you're doing 2 to 1, say your stop loss is 5%, your gain's gonna be 10%. Set your alert at 10%. Once it triggers, sell. Don't look at it.
But let me piggyback from that. I think a lot has to do with your position sizing because I've been reading the comments and I think a lot of the guys are going way too heavy for their own comfort. So, you know, your half of your account, quarter of your account, you're in there. Of course, you're going to be nervous. You know, back in the day, I remember something clicked on me. Like I got to a point that I was okay to lose, let's say, $10, and I'm like, you know what? I can care less if I lose $10 because I know within a week I can make $100. And as I kept going, and again, I haven't been doing this for that long, it kept increasing. So now, you know, I feel that if I lose, you know, $200, it's okay. Like I don't feel that because of my position sizing, right? So go ahead, Rick.
Yeah, because I call what you say the pillow factor. Because you know when I go to sleep, I want to go to sleep and have a beautiful night's sleep and not be worrying about my position sizing. Because again, that's probably another topic to talk about. We could probably go more really deep, Serge, is for both stocks and options is position sizing. I already touched on it a little bit on the previous question, but yes, position sizing will get you to your goal, but it can also cause you to have an ulcer if you don't know how to really do it properly. So then, for one, is you can once the stock breaks out, you can use if you want to know about how to hold. Once you're at a gain, you can then use one of the short-term moving averages to hold the position. So, are you guys still there?
Yeah, go ahead.
All right, 'cause I heard something drop. So yeah, you can use the short-term moving average. Like for example, this orange line is the 10-day moving average. As long as it stays within that and doesn't close, that's the key word. Doesn't close. It can go below it, but as long as it doesn't close. Oops, sorry. Here, you can see here. Here it went below but didn't close. Here it went below but didn't close. It opened below it but closed above it. You can use that as a short term. The minute that it closes, then you can say, okay, I'm out. But only use that once you're in the game, not before you're in the game. And if you want more security, then you can use the 20 as a buffer. The ultimate, which Ken Slim people talk about, is the 50. But you only really want to use the 50 once the 50 catches up to your average cost price. Then you can switch to the 50 and then ride that for a long time. But from here to here, you don't want to use that. That's too much air pocket. So that's this one that I'm in. Another classic one is Team.
Team, beautiful, yep.
Yes. Because you can see Team actually closed. Remember, look at here. It closed, but I already had a good position, so I held it. But then it came back, and then you can see here, he's just riding along the 10. RNG.
Yeah, that was a good one.
Here it closed, but again, this is before profit. Now I'm in profit, but I have air pocket now, so I have to be careful about that. And earnings coming up, but RNG, it's riding it. Cyber. Again, see here? Look at this guy right here. He shook out people. That was a good shakeout, but he closed above it. So again, I'm in profit here. And then he opened, came up. That's it. And an old trade from last year, I showed this to some people, is Twitter.
Twitter, yeah. No, I didn't play Twitter. They had earnings and
that was the one. That was the one last year. You went like, where's all that Twitter money going? And I said to you like, into my bank account, bitch.
Nice.
Yeah.
Oh, but now back in the day, yes. But now recently, no, I didn't do Twitter.
Yeah, because you can see here was the VCP for Twitter.
I see Eric joined. Who else joined? Hey, what's up?
Hey guys.
Hey Eric. So yes, you can see here, guys. Twitter just hugged the 5 and also hugged the 10, and you can see here, you just had to sit through. Some people would have gotten scared on this red candle. Oh shit, shakeout. Oh.
Right, but it didn't violate the 10.
It didn't violate the 10, nor if you want to be even really tight, this yellow line, that's the 5. Look how it hugged the 5. And then you could just held, and then finally, all right, I'm out here. Yeah, you gave back a little bit if you would have kept it there, or if you would have, I just did a profit backstop, so I just kept moving my stop loss up. So it finally hit that.
So for the newcomers, we're talking about the time that you hold a stock. Basically, once after you buy, instead of freaking out, there are certain things that you can kind of reference to make your decision to buy or to keep, to keep buying or to sell, get the heck out.
Yeah, you can use like, some technical indicators to say, okay, I'm going to hold on to a stock. And the common way is use a moving average line. You can use a short-term moving average, such as the 10, or even shorter as the 5. So you can see here, Twitter at that time, I bought here and just held it all the way up to here. And you can see it never violated. Here it finally violated the 5, and I think that's where I really got out, not on the 10.
Mm-hmm.
It was right there, it was right here, it got out. And then the 10 finally got out around here. So yeah, I probably got out around here at that time. So for Aki, you look at moving averages for your holding time once you're in a game. Once you're in a game, and you can sort of like, what should I do now? You can use a moving average to see how far you can hold it into. And then if you're concerned about that, then you can employ the sell half rule. Sell half, hold the rest, ride to the moving average, and let it go, and go off of that. That's the one technique I've seen that seems to work well.
Any
Take a look
questions
at-
or comments on that?
Yeah,
Go ahead.
That's a good idea. Yeah.
Yeah, let me know if you have any questions about the moving averages. Because again, you can use the 50 once it breaks through your average cost. But again, the 50 can take a while, like it did for me on HLF, which got demolished because of the CEO recently. Thank you. You see here, I bought HLF here, and eventually, you can see here, I wasn't in deep profit, so it broke it several times. So at this point, I'm there like, you know what? Let's see what happens. And then eventually, here, the 50 finally caught up. So I'm just now, okay, I'll just use the 50, 50, 50, 50, and then my alert finally hit, and then I'm out on that, the CEO violation. So there's many ways to hold. 50 if you're going to go really, really long term. If you're going to go short term trading, then use either the 10 or the 20. I think we posted, if I'm not mistaken, Serge, from Gil. Did we post his 7-week rule hold time in the group or no?
I think so. I remember. See.
Because he has 3 videos: pocket pivot, viable gap up, and how to hold. And he talks about the 10-day moving average in that video. If not, I'll repost it later on.
Okay.
Okay,
Right.
so guys, any questions? I've talked about how to scale in from going from cash, how to hold for a longer time frame, showed some setups. Any questions on the setups? Any questions? Spoke about the VCP. Any questions on that before I hand the mic over to Serge?
Well, I guess as they come, will stop me and just.
All right. So at this point, I pass the mic over to Serge. What's up, Eric?
What's up, guys?
Sharon.
Eric, Ivan, Rick.
What's up, Ivan?
All right.
What's up, guys? Ivan, actually. It's
Ivan.
Ivan. All that.
All right, Serge. The mic is all yours.
All right. So I'm gonna do some quick. I'm gonna just show the homework. I don't know if you guys saw the homework. Can you see my screen?
Yep.
Yeah.
All right. So just going on the homework, I know I posted a lot, but there are a lot of good stuff. And again, the way we talked is, in the beginning of the conversation, we talked about the amigos, the SPY, the QQQ, right? That's your guide, They are, if you look at the SPY, and that's one of our favorites, as we know, you can see that it's almost about to hit the 200 mark, right? it went there and they pushed it down. But based on this move is that we're picking everything right now. I pick up the SPY, but if you look at the QQQ, it looks similar. SPY is kind of the leader of the gang in my mind, but it depends because every sector has its own, QQQ, SPY, everything is different. So what I'm gonna do real quick is just go over some of the pigs that we selected in the homework. So EEE, anybody writing EEE? I know 2018 is writing EEE.
I got in it and got out at earnings because I didn't have much of a gain.
Yep.
So
All right.
now it's made its move. I mean, I should have got back in for me on the day of earnings because it had that little flash crash. If you zoom in on the chart, Serge.
Right.
And then came back up.
I know, that's why I like it. I'm like, whoop, let's go fishing.
Yeah, because it's kind of the same thing. If you look at LRN, it did the same thing on earnings.
Which one?
LRN.
LRN.
You see, it had that flash crash on earnings and then skyrocketed right back.
Oh wow, that's nice. I know how to do it. I do. I don't. All right, so again, when they do, so this is another thinking, guys. When they do good numbers, good earnings, good guidance, numbers, volume is strong, and you see them drop, okay, that's when I say, yep, they can drop him all they want. Whenever it stops, I know I'm going to be all over that. And so that's what we did. After the ER, they pushed it down and picked it up here. If you look at the week, this is 1, 2, 3, like 3 week, 2 week tight in a tight range. You can see it, right?
Right.
And again, volume, the longer the consolidation, the better it is. And as you can see here, it is breaking on a nice volume. Look at this volume. This is a pocket pivot right there because of the earnings activity. But yeah, we're in profit right now. I'm in nice profit. Let's see what it does. So, and that was with the market behaving the way it did. Imagine on a good day. So hopefully we can make some money on Monday. So that's that. And then if you look at the comments, so very strong, blah, blah, blah. Oh, and they issued a 5 million share buyback. That's a bonus. The guidance was in line. So, I like it for a swing. Second questions, comments on the
So, Sergey, I have a question. So when you go and look at the news or the catalyst, and so how far do you go and look for that? Is it like recent, very recent?
As you can see, this is my list. And my list right now is 200-300 plus names. So I spend no more than 2-3 minutes on each name. All right, and then that's a lot. What I do is look at quick titles. I don't read deep into the news. So when I look at the chart, the first thing I look is the daily, then the weekly, and I'm talking about quick. You train the eye to do to look for the 1 or 2 patterns that we know. Get familiar with something you do well, VCP, W's, whatever, and then kind of look for them. So to answer your question, once I look into a couple of titles, good section. If I see anything that catches my eye, then I go in, if anything. But all the information I pick is just from title searching, and usually in the title you can see it tells you, they beat earnings or they're buying back this, and if you want to read again, you can go in deep. But I don't spend a lot of time. Yeah, I focus more on the. Go ahead, Rick.
As a suggestion, I mean, Sergio is used to that long list. I used to do the same thing also, but a good suggestion would be to split your watch list. to have a watch list that's buy ready. You know this stock is ready to come out, and that's on your key radar. And another watch list would be is on deck. The stock is setting up. It's not ready for buying, but he's starting to get there. And when it's in buy ready, then you flip it you move it out of on deck to buy ready. That way you keep your eyes focused on the few stocks that are ready to go, than having to scroll through like this. I mean, if you're used to like this, cool. But if you really want to keep your focus, look into setting up 2 additional watch lists.
Yep, that's a good one. I'm a bad example, Ash. So I have my ways.
The thing is, I would be like, which one's ready to move, and then I'm like, you know what? Let me just the ones that are really ready to go. Make a watch list for that one, and move those guys in there. That way, come to the market, I know one to really focus on.
Another thing to piggyback on Ray, the ready to move. What I do, I set a lot of alerts. You wouldn't want to be getting alerts from me because I have a little system alert to, hey, pay attention to this. So for example, even before this guy broke, I had alerts around here. I would have alerts around here. Again, since I'm not looking at the screen all the time, I would set up alert and then, pay attention, something, buyback or breaking, attention on the break. All right. And I would get this alert, WWE is breaking up. Then I would go and open the chart. That way, it's very good what Rick said about the
yeah, that's
watch.
And definitely, you definitely want to set up the alerts. Either set up a pre-alert. That way you can set up. If you don't have your order already programmed, like Sergio would do, he would have several alerts. So one can be like a pre-alert, like, hey, pay attention, this guy's moving. Right there's your point. Okay, oh, he's moving pretty well. Let me set up my buy stop order, and off you go.
Exactly.
Okay.
So,
I usually set the alert, but I was not setting up the notes, the little notes or the annotation that you added. So that would be a good idea to add it.
You can do that if you're from a computer. Unfortunately, I don't think they have that. I complain about it because from the phone you cannot add those. From the phone you cannot name the alert. The phone is just a plain alert. You got it?
Yep.
Oh, all right. So WWE, good. I'm gonna move fairly quick. This still in play, guy. Again, the next resistance is, I don't know, this area around here. This was before. Then you have this. So it's a rocky patch, but let's see what happens. They had good earnings and good numbers.
Yeah, because what was that drop, sir? On that was like about 40% drop.
So it went from 97.
Just shrink it down a little more, and just do a trend line from the top to the bottom. Oh, more. You need to shrink more.
Mm-hmm.
You need to shrink it more. There you go. There you go. About 40%, right?
Yeah, 40%.
Yeah. So it has.
So there's a lot of people trapped there. Let's see. All right. Next one we have was AAP. AAP again, double bottom. She's bouncing off the 50, actually the 100 SMA, and in between this 50 here. So until they don't break the buy point around the 166, 165, depending for confirmation, I would keep it closed. You know, they have, this one is following the 10 SMA, as you can see, and it looks pretty neat. Another one, last one, not last one, but we have Safe. Safe, when we called it, this is the second time that I think I called this. It was breaking this, it popped to the 64, but then they pushed it back down. It's still looking good. So again, keep an eye on it. Goldman Sachs is all over this. They gave it they raised their price target to 85, and it's looking very nice. MRK, you know the story with MRK. I think for last year that was one of the MVPs. It's setting up very, very nice. As you can see on the weekly, it's getting super tight, and now it's breaking up. I like to see volume kind of do a U shape, but that means when volume is drying up and sellers cannot push it any lower, you can tell that sellers are either getting bored or they cannot push any lower. They have a bunch of FDA news, and they just got ER recently, so that was a pretty good indication. BSX, Rick, I think you cashed back then. I'm not sure if you're in again.
No, I'm not in now. I saw the move, but again, it was earnings coming up.
So it broke. It's breaking this kind of trend here. I like it. Volume coming in, kinda. So I mean, I started a position. I'm in profit. This on the daily looks pretty good. ABT. ABT looks like a kind of a W pattern. Old resistance, new support. I have basically an alert. I have a bunch of alerts, but 74 is when you start paying attention to this. As you can see, you see it, right? The longer the consolidation, the better it is, and voila. Energy. I'm not good at energy. I haven't been paying much attention to this, but this guy, I've been I don't. It doesn't look this. I mean, it looks good. It looks good on my phone.
Yeah, I mean, you can see the VCP, the contraction, but again, energy stocks tend to move really slow. I mean, it was leading during the correction. There's a lot of energy stocks were busting out, but they don't really tend to move once the market gets back to normalcy.
Yeah. So yeah, that's a correction mode. It didn't suffer that much. So. All right, let me see how many we have. A couple more. So hang in there. Is this useful for you guys? I mean, we can talk about anything else. Any other topic you'd rather talk about?
Any stocks you want to talk about?
Any stocks you want to talk about? Or is this okay? How are you doing with the journal, Eric?
I mean, I love it. You know, last week I got a little not reckless. I didn't get hurt or anything, but I noticed I got a little impatient with my entries, and I made some bad trades. And then I caught myself chasing another trade right after. Now, there's such tight stops, I don't get hurt bad, but the part pisses me off is that I got to put in a loss in my journal. So that helps me focus, because I don't give a shit about the money right now, because it's nothing. But when you see you're hurting your progress by putting in a journal, it kind of smacks you, and it makes you focus more. I think that's the best part about it. I mean, put every chart in there. It takes 3 minutes to do it. And I was looking back on like all my stuff all my trades in the week. And like I noticed, like I really love like a bearish divergence trade and stuff like that. And I notice if I take them where the peaks are too close, they generally fail. When they're wider peaks, they work. Just stuff like that you see from looking at your charts. It's really great, that journal. I know I always like harp on it, but man, what a difference.
Good. I'm glad Rick gave you a tough love on that.
It's true. And what I was going to say about the day trading thing, see, I'm skittish with the markets because I have a control issue. But what I really like about day trading is these patterns, they're the same as these daily patterns you're showing on here. And you see them so much when you're day trading, it just gets rammed into your head. Like I'm looking at this stuff and I'm looking at it as if these were like 2-minute candles. Exactly. And it's the same shit. And I'm just power pumping. That's what I
said in the chat. Somebody asked me something like, and I was like, no, it's the same as if you're. I think it was what's his name? Somebody was asking. I don't remember who, and I said, hey, day trading and swing trading, it's similar stuff. It's just different time frame. You're looking at the 2 minutes and making decisions based on that. But at the end of the day, it's the same pattern. Same W, same VCP type of deal. So, yeah.
And one thing I really noticed, what really used to screw me up swing trading, because eventually I will go back to swing trading, but I'm using this to like train myself a little bit. I was very famous for buying falling knives. And you can...
I remember.
Yeah, but what I noticed from day trading is I'll have all my resistance lines drawn and support lines and stuff like that. And the SPY will say it'll drop. And then it'll start kind of rounding back up. And once I see that volume picking up and it passes back over a former support line, that's when I'll get in. And then I'll have a stop right below. And you can do that same move on retracements on swing trading, which is what I would never do in the past. I would try and catch the bottom, and I'd be too early. And eventually it would come back up, but my stop would already be hit by the time it would come out because I never waited for confirmation.
Right. Yeah, no, that's a good point. So,
and that's what you always did. And I was like, why are you waiting? You already missed the move. But no, dummy, you got to wait for it to prove that it's coming back up. It's got plenty of moves still left in it.
Confirmation. Yep, absolutely. So that's good. Let me see. Ivan, so what's your nick in the chat? Because let me see.
I came a little late. I don't want to interrupt everybody.
No, go ahead. But I'm saying your nick. You have Ivan as a nick.
Oh, in the chat it's Hajduk ZD.
Okay.
That's me. The guy asked me all the stupid questions.
No, they're good.
I feel so dumb in that chat. I'm like, oh my god.
Now I know who you are. I see. Okay. Because we have this Nix, and then when you meet the person, like for example, in our last meeting, everybody thought 2018 money was a guy, and here she comes, a beautiful lady. There you go.
Oh my god, I thought that was a guy for sure.
Exactly, and so that's always fun. There you go. Look, she's LOL. But that is good. The little family's growing. I feel good that we're kind of sticking together and kind of hustling and learning, giving each other some tough love and trying to make money in the process. So don't give up. Don't feel that you're asking too many questions. Like I told you once, I'm like, dude, the worst that can happen is we're busy and we'll probably ignore you. So
this guy one day.
Nice. That's what I'm talking about. Without the drunk yelling, of course. Yeah. All right. We're going long, but one thing I want to talk about that I learned is the tax. So don't forget to claim, do your taxes. If you're doing Robinhood, it's simple to do it. Also, keep in mind that you can claim and make sure that your accountant does this. You can claim up to $3,000 loss for the year. And if you have more than $3,000, let's say you have $5,000, you can claim $3,000 this year, and you can claim the rest next year, assuming that you didn't make any money, all right? If you lost $10,000, you can claim until you eat it up forever. I mean, I assume that eventually we will start making money. So if you lose $10,000, let's say, you can claim up to 3 per year. But if you start making money, that will eat up your 10,000 that you can claim. So keep that in mind. Make sure when you do your taxes, you do that every year, right?
I had a question about, well, not so much this year, but for next year. You know, what about wash trades? Because, like, me personally, I'm just trading SPY, like hundreds and hundreds and hundreds of times. I know there's a cutoff point when I have to stop trading it, so I just don't pay only the wins and not the losses. Do you know how that works? Is it like the December or?
You know what? I have to get familiar with that topic. I'm not that familiar with that wash stuff, but I know what it is, and I started reading about it, and it does make sense that we know what, because if you within 30 days, there you go.
Within 30 days of January 1st, is that of the start of the new year? Is that how it works?
2018 was the one who replied, I think.
Okay.
I guess she's typing. You can trade the same. Can everybody see what she's typing?
Yeah, you can't trade the same stock and lose in 30 days of the end of the year, correct? Because you can trade it all you want.
Within the month.
Within the
30-day period. There you go. We said the same.
Yeah, but so then what do day traders do? I don't understand then. Who just trade the same stock? Maybe I'm totally missing it, but
watch, trade a different stock.
No, I know, but I think you can do it from what I've read of it. I got to dig into it further, but I read of it. You can do the same one, but when it comes close to tax filing season, like at the end of the year, you have to stop 30 days before. And that's why people sell their stuff in December. You hear about big guys selling their stuff to claim their losses. I got to dig into it, see how it works.
Yeah,
you may be right. I'm just not sure.
Sell in December just to claim the year losses in a way, not necessarily the wash sale. That's not the wash rule, though. Yeah, that's what I kind of said. So you sell in December because December will be your, December is your cutoff for claiming your taxes in this year. And then you can, in my case, you can reset your account in the beginning of the year.
Right.
I like to first month reset my account. If I had whatever gains that I made, I take them out. Sometimes I move money from one account to the other, avoiding the commissions or vice versa. But no, we got to look into that topic. Absolutely. I owe you that. So read and let us know what you find.
Yeah, sure. I mean, I still, from my Merrill Lynch, I still didn't get my my tax form yet for my trades last year. I'm dying to see what that thing looks like. But I'm just hoping I don't have to do a lot of calculations because I trade a lot of the stocks the same times and definitely within 30 days, like a lot. I trade a lot.
You'll have the monster. The first page will have everything for you. All you gotta do is just give it to your accountant, but don't forget to print out the book to bring over there. Even though they just look at the first page, but you also have to print out every single thing, every single page of the statement. Because, like, Serge, how many trees do you kill each year?
A lot. And you know what? With my accountant, we do digital though, so gotta watch out. But you do have to show in the, at least the statement for TOS and Robinhood. Like Rick said, the first thing tells you a summary of everything, so you not necessarily have to go over. Do you do your own taxes, or do you have somebody to do it?
Oh, I set up all my taxes and I give him everything. I have it all itemized, but I like to have him put it in so I don't screw up. He also works for my company, so I don't want to stack him or give him 200 pages of trades because, I don't want word traveling. That wouldn't be great.
Nah, don't worry about that. It's just you just look at the first page.
Okay.
You just gotta bring that in as evidence of everything else.
Oh
Right?
yeah, sure. That's okay. I'm just because I've heard horror stories of people calculating wash sales, and it was just like it's a real undertaking sometimes.
Mm.
But technology's come along. It could have been an old article or something. Who the hell knows?
No, yeah, let's read about it. It's a good topic. So, all right, we have 2 more minutes to go. I'm not gonna just check out the swing homework. There are a few that I really like. There are others that I would wait for, to see the market deck. They had good earnings, good financials. They have a solid chart right now. It kind of, I like the fact that old resistance, once it popped, it went like a little U. It came down for 3 days, and now it's going back. I would watch it to see, but she looks okay to me. And then Horizon, Rick talked about this guy early. VCP pattern all over. And again, like I mentioned, I really like this because BlackRock, they just announced that they raised their stake to 8.3, which is not pocket change. It's a solid. Every time these people put their hands into something, it usually skyrockets. Oh, not overnight, but throughout the year.
And on that drop, it looks pretty good because it popped up on good volume, and then when it sold down a little bit, the volume is not crazy. So I think that's a good sign too.
Yep. So I put it in the homework, and USM, it's another one to kind of, I'm not crazy about it, but looks interesting. It's riding the SMA, very solid, and same here. So now it's doing this, and look at the volume here. A nice pocket pivot. Again, I think about this as a train. So big train moving, it needs some momentum to break and then go back the other direction. Same with this guy. When they come down, the volume here is a good indication that may be an early retrace. So, all right, and that's all I have for now on the homework. But good stuff. Any other questions, guys?
Yeah, don't be shy.
I've asked you guys like sometimes about the Atmos Energy ATO. I've been looking at that for a while and been on it since it was $90 actually. So I'm in a nice cushion. ATO.
Oh, ATO. We have this in the past. That looks pretty good.
Yeah.
Yeah, I've been writing that for dividends, and it has really good dividends as well. They've been increasing it every quarter. So
that looks pretty good. I like. I'm adding it to the list. Nice bounce from the 200 too. And look at the weekly. Solid, very solid. Good find, absolutely. I'll definitely harass her. I'll put a list. Yep. So that would be for me. That would be the kind of the buy point to watch. Knowing myself, if I'm paying attention, I'll probably be all over if it breaks the high of day of Friday, and I would be selling some here, expecting a slight pullback, and then a continuation based on what I hear.
Okay.
You see? So, man, definitely good find. Absolutely. Keep it up, man.
All right. And can you quickly talk about volume drying up? How probably it's difficult to talk about like when would be the absolute like okay, this has completely dried out.
Well, that you would be seeing the price get really tight on the left side. Like Serge, pull up 5.
SPY?
5.
5.
All right. There you go. On a daily or?
Yeah, daily. No, regular daily. You can see, I'll make it big, thank you. You can see the chart, the price has gotten tight. From that one correction, from the top to the bottom, it rallied up, corrected, and you can see the buildings, like I call them buildings, the volume. You can see how the building is now smaller, and then after that last red candle, you see how it's gotten smaller and smaller and smaller.
Mm-hmm.
That line above it, that's the 50-day average. You want to see the volume below that.
Oh, but you know what? Go ahead. I'm sorry. Yeah, this is another one that was, we called it in the homework.
Right.
And this is a good example. Let's see.
This is an example of volume increasing.
True.
From the break. Because you see.
But look at, if you don't look, I mean, you can see the volume decreasing a little.
But it's more towards the breakout period. That's why I was saying 5, because 5 is close to breaking out. The prices has gotten really tight, and the volume is shrunk.
I'm trying to think of a super clear example, but one thing that I can think
Even
of.
Twitter. If you go back to the Twitter example before the breakout from last year, you can see the volume dried up right there. Nope, go back, not now. Where it ran up, right there.
Right.
You see the volume? Look how tight the prices are. How tight the prices are, and look at the volume.
Okay.
Dry up, and then when it broke out, boom, 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 boom. Great follow-through days. Then after that follow-through days, you'll have volume back to at least somewhat normal and still above average.
And again, you have to look at the volume, but you also have to look at the chart. So look at this chart. You know, this area here is resistance. Then it goes down. Then it goes back up to the area kind of where it was resistance. And it gets rejected. So every time, I don't know if you read the article I posted yesterday on the manipulation and what the stock operators do. They like to keep them in this range. Also retail, right? But you can see that the volatility is contracting a little bit. You see it?
Okay.
So, you see that, right?
Yeah.
So every time there is a big wave, whoop, it goes to similar level, but then the wave it's like it's clearing up the people that are stuck in there. That think about it as it goes to this. Think about it this way, like the article says, a bunch of people buy here. Now they are stuck, and that's what Rick was saying earlier today about the overhead. They're stuck in here, so now it went down. They're like, oh shoot, okay, let me hold and hope that it comes back up. Once it gets back up to this area, they take the loss. They're like, oh wow, you know, I've been so long in loss. Now I'm closer to my buy point. I'll take it. And
right,
this
and also, Serge, go back to that bottom green candle.
To this?
No, the green candle.
Green candle here.
To your left.
To the left.
At the low, this guy, all right? Now at that point, you got the trap buyers, they're there saying, oh shit, fuck. Now at this point, you got people that are bottom fishing and they'll come in and buy. And then, like Serge said, once it starts going up, at this point, the bottom fishers made a great profit and they'll sell. The people that were stuck, they're like, thank God it made it up to here. I'm selling, getting out. And then that'll cause the next pullback going down. And then again, you'll get another, and then you get people buying, they'll get stuck. Bottom fishers will come in, buy. These guys will now get out and sell. So that's why you have that supply and demand. Because you got the bottom fishers coming in, they're making a quick profit, getting out. The people that are in overhead supply, they're happy to get back out at break even or at a small loss and move on.
Exactly.
And then that's what they mean by the elimination of the weak hands. It's either a shakeout, time, being stuck in it, they'll sell because they're like so frustrated and that they give up. And then eventually institutions just buy them up. And then finally, there's not much supply coming in. It's low, and then all of a sudden, boom, off to the races.
But look, this is beautiful. Exactly. Right there, look, big wave, everything we said, people trap, people buying here, they sell for. So every time the wave, it's contracting. So that's the volatility contraction pattern. But look, at this point, you can tell that it's a smaller wave and it is almost at the previous. So I'll be all over this. I'm like, guys, we got to pay attention, blah, 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 you know. And you see the volume drying out. And that's when you hear me or Rick or anybody say, hey, the volume is drying. Volume drying is not a bad thing all the time. It means that one side is running out. You're kicking people out. In this case, since it's pushing up, that means all the buyers are kind of, there are less sellers than buyers, and prices are getting tighter and tighter closer to the resistance, which causes the next thing to be like, you know, boom.
Yeah, but then you can see how it goes from those lows to suddenly you're getting huge volume spikes. Meaning people are buying them suckers. And then after those follow-through days, then you can see it still moved up and the volume isn't as heavy as it was, but it was still good enough.
Right.
It was such a great example. I appreciate it, guys. I learned a lot just on that 2-minute video right there.
Can I ask a question here, guys?
Go ahead.
So on the time, my question is about the timing. So on this chart, you know, we obviously don't know the future. At what point would you buy this if we didn't know where the price was going to move? And then at what point would you have to sell, or would you want to sell? Like, would you want to buy when you see that big spike in volume, or you want to buy a little bit before that?
You would want to buy at the breakout. Once you start seeing where the, like in this example being, you want to buy at the breakout. Once you see where overhead, where the resistance is occurring, that's where you're going to place your buy order. Wherever you see that resistance and in this case VCP, that massive tightness in price, that's going to be your pivot point, as they call it. Mm-hmm. And then once the stock breaks, you want to be in. Now, if you follow traditional Can Slim model, aka O'Neill, IBD, if you're going to follow them traditionally on the breakout, you want to see the volume be at least 50% or more above average.
Right.
By the end of the day. Not at the beginning.
Which leads me to the right now, the example that's happening. Look at what we did on the WWE. Again, we picked it up, as you can see. Big wave, smaller wave, consolidation. Look at the volume here. This yellow line is the average volume. I cannot trade without this, guys.
Thank you, Richie.
Thank you, Mr. Richard. And, volume average, it tells you the average is this, boom, this is more. So right there, you can see how strong this candle is, and I'm all over that thing. So that's, yes, that was 2 days ago. So that's when I buy either half of my position or whatever. At this point, I'm like, you know what? This is super strong. It's been consolidating for so long. Look how many weeks. And now it's kind of poking her head on volume. So I'm already all over this thing. And look at the next day. So I'm in here. I got in this day. And look at the next day. Boom, a little mini. And again, think always, you know, like Mark Douglas says, anything can happen. Anything can happen. It could have gone the opposite way. But the odds, the probability that for this to go up are slightly higher than to go down. So that's when I would be buying and writing this. I could have sold for a nice profit, but hey, I'm holding it to see. Monday, you know, the market closed strong, and let's see what happens. So this is to answer your question. After a nice consolidation, after a nice, you know, we've been hitting it back and forth, just any break for confirmation. Sometimes I find myself picking, you know, the bottom fishing, but I would apply similar thinking with a fewer candles. So for example, if I would have picked this around the bottom, I would have, you know, oh, green candle, then here, 1, 2, 3. Look how close the high of day of this candle is compared to this. So very close. And look, 3 days in a row, they are kind of close. So if I would have been looking at this around this level, I would have picked on inflection points on this and this break. So if I'm day trading, or if I'm now, let me see. This would have been my indication on a nice entry. So I would have been all over it around here, and look at the volume. Volume validates. Look at the volume the previous day.
You don't think that one's
the volume previous day, and now you have.
I'm sorry. You don't think that. You don't think that green candle with the red volume?
I wouldn't be in here yet.
No. The two to the right.
2 to the right. 1, 2, 3.
That one. Back. That one. Yeah. You don't think that's a bearish one because it's got the candlestick at the top?
No. Well, it is, but look at the volume. It's so minute. So it's like two bears pushing it down. Exactly. It's like two people pushing this down. Look at the average. The average sells it all. And that's what you hear me saying. Hey, this is two people with $100,000 accounts pushing it down. But then the next day,
I wouldn't say $100,000 accounts.
Yeah. Well, you know what I mean. but you get the point, right?
Yeah,
I got you. You don't want to have inverse candles. Absolutely not. But I wouldn't still be in this. But with this volume, I'll be like, nah, that's nothing. That's nothing. And then you have 1, 2, 3 days, very similar high. So once you break, if you're day trading, I'll be in and out, hit and run. Or you can write some and leave some. You know. And also another thing that would guide me here is that look at the 200 SMA here. So I would be looking at the 3-day high, and also that it reclaimed and broke the 200 SMA. So yeah, this is a good example. And the SPY. So when I day trade the SPY, it's the same thing, guys. It's just a narrower. Narrower, I think. Let me see. So I use the 5 minutes and I use the 2 minutes. Hold on.
You got someone feeding you from SPY.
Hold on.
Serge has insider info from SPY. I'm convinced of it.
Who's that?
I'm convinced you got insider info from SPY. You've been on
That's
target.
lucky. I've been lucky, no, but on my phone, I don't know. The screen is big as heck, but on my phone I'm used to my phone view. But let me see if so I had, look, the SPY has been doing similar things throughout the week, or last week too. So basically it starts the same way. It gives you a chance. It gives us a channel.
Now, let me ask you something while you're drawing it. How come you didn't draw it through that top wick? Because that sometimes nails me when I day trade the SPY. Like, I'll draw my trend lines a little off.
It's preference. Some people would take it. I like the meat. This is kind of thin. So, you know, it went up there, but it didn't kind of sustain.
Right.
So I like to have it around where the
body is.
Concentration of, you know, the meaty. You don't want the skinny lady. You want the, you know, nice thick, you know, meaty bone, right? So.
Like fatty? What?
No. I like skinny. You know, hey, we have a lady in the room, so you know, I think it's. So, anyways, I'm sure she works with guys and hear this type of jokes, which is bad. All right, but then you have boom, 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 right? So you want around the meat. So the SPY does this. You can trade, you know, the in and out, risky, maybe not. But, and if you look at when I call the SPY, I said, if it breaks any of the lines, you have to be all over it. Look, right here. Anyways, so if it breaks any of the, you know, it touched already 3 times, boom, boom, boom. If it breaks this side or this side, there is a higher probability that it'll either go up or go down. And this is what it did. It broke here, so I was all over this. Again, not without risk, because now that it broke here, it usually run, and you know, all resistance becomes some support. So I'm hitting and running. And look at let me see, I remember this part because I got in and I was going to say something and I got busy and I didn't. But look, it broke. Oh, this is a good one. Look at this. Are you there, Juicy? How do you pronounce your name?
It's Yuzi. Yeah, you can go with that.
Okay. So look, I remember when I got in. So it broke here, right? You remember 1, 2, and 3. So it breaks. I didn't get in yet. It went up. Then it comes down. Look at these candles. 1, 2, and 3. But look at the volume. So it breaks. Look at the green. Boom. Same thing that we've been talking. Green above average for the day. Then it goes up. Then we have 1 or 2 or 5 or maybe a little chat room promoting, hey, let's short it. A few people jump in. Look at the volume going down. That means that the buyers are still in control. So I remember getting in around here. I'm like, nope, this is going up. And look, 2 things. One is this doji. The other one is the volume. And look here, that yellow, all resistance becomes new support. So this is me right around this area, getting in, thinking that, okay, all resistance, new support, low volume. I have this yellow as my support. So if it goes against me, I may be selling around the yellow if it breaks. But it didn't. No, boom, man. Guess who was riding that sucker, screaming my way, driving. I was like driving and singing and all happy. So it's the same concept of the volume drying up.
One thing I noticed, and I noticed it last night, so I trade like little setups, day trade, things I look for. But one thing, and this relates to what you're saying here, is One thing I've not paid attention to enough is the larger trend lines of the day. I'll be micro-focused on a little setup, but my brain won't be noticing that big trend line you just drew. So I'll be seeing another pattern, but I'm not realizing, oh shit, it's breaking out of this overall daily trend. So the bigger trend has more force than these littler setups that I might have been looking at. So that's something I noticed from studying my stuff. And that's a perfect example right there. I think I screwed up a trade around that trend line, which made me realize, oh, damn it, you're not looking at the right thing this time. So I don't know if there's any truth to that, but I think those bigger trend lines have more significance than little setups that you might see.
Absolutely. And that's what, you know, and especially you that you say you don't trade before 11, you should have a nice kind of where is it at, and this is 11:30 12, so you have a channel there, you know, descending west.
And you can see also the pretty much the VCP from where he started, the top trend line.
All right.
Goes down, comes up, comes down, and then gets tight right around, what is that? 1345.
Give me 1 second, guys. Hello?
Yeah, it got tight right around 1345. All the way down. No, all the way down.
Another one.
Whatever you want.
And those are all little scalps right there you could play too, breaking out of that triangle. Every single one of them, if you're going for small moves.
It would be one large from the top to where he drew the second line. Actually, all the way down to the third. That would be your main contraction. Then it comes up, then contracted. Then by 1345, there's your break. It pulled back in, testing it. Then off it went to the races. Right after 1345.
And if you didn't say this was a 2-minute chart or whatever it is, you could say it's a day chart, and you would have no idea.
Well, that was the thing. When I went to Mark's seminar, he showed an example of when we were doing live trading of a 5-minute chart with the VCP, and he was saying, yeah, there's no difference in time frames. You can look at each little 5 minutes can be your one daily.
Yeah.
Yeah, and then right around 1345, boom, off she goes. Little natural reaction, keeps going up, and then you get that big candle spike. Beautiful.
So SPY has been very nice. And look at the volume at the end of the day. That's crazy, man.
You called that too. I didn't know what it was going to do, but man, they pumped it up or somebody bought it.
Yep, I'm like, what do we think? I'm like, nope, it's going to pop because, and again, it's going to pop. It's just the volume. I don't know. And you know what is a good book? The one that V Marie recommended. It's simple, but, you know, it kind of refreshes on the volume and the volume price action and all that good stuff. So, but anyways, guys, we've been what? Oh, there you go, right there. Yep, that one. I'm on my last I think 20 pages or something. So
yeah, that book has been in the study guide section for a while now. That was like one of the early books we posted up.
Yeah, it was there, but V posted. I didn't read it. I read it.
One thing I was going to tell you about the books that I really like, what I do is some of them, if you have a PDF version of them, some of them let you highlight and copy, and I copy it and I paste all the notes that I really like out of the book into a Word pad. So then I get a compressed like Cliff Notes of all the real key points I like. I just started doing that. You know, some books don't let you do that on the PDF ones, but the ones that do, it's really helpful because then you can just read back through like 20 pages instead of 300 of all the notes that you really liked. And it just compresses and you just save them as files and stuff.
All right, my alarm clock is up. All right, guys. All right, so thank you for everything, guys. You know, let's keep making some money. I'll continue looking at but I don't want to overwhelm with too much information. So as you can see, my list is a lot, and sometimes there are a lot of good stuff there that I'm like, man, this is good. So I just hold it and then post it during the week, and but now good stuff and good topics. You know, I hope we were kind of sort of a help, and let's keep at it.
Yep.
Thanks, guys.
And thank you very much.
Yeah, thanks, guys. Appreciate it.
I think guys, we should do this more often. Yep, we should do this more often as possible. So, all right, good weekend, everybody. Enjoy. Okay.
Take care.
Bye.
All right.